Get started. All right. Getting a little impatient, so we can start now. Anyway, what's up? Welcome back. How y'all doing? Appreciate y'all popping out to a stream. This will be number, I believe, 5 or 6 of our series that we are starting. Now that we have some sort of basic knowledge of smart money concepts and these concepts that we're using to trade, then we can understand now with this breakdown that I'm about to show you guys today, how we can take all those concepts, apply them to real time, and how they'll show up in charts. I will say always that I'm looking for the market behavior versus patterns to trade off of, to understand exactly the story of the market versus where should I enter, where should I exit, right? What story is the candles telling me? What can I notice from previous price action, right? And the right side of the chart coming into areas of previous price action, right, to be able to take a trade. So we'll do a little bit of basic Wyckoff analysis as well. I'm not going to be putting on any labels on these schematics that come up, and the reason for this is because I want you guys to get used to the behavior of what's actually happening. Versus the labels are going to come later, and that's going to start to learn, or you'll start to learn what each label does and why it is meant for a certain scheme when it comes to market manipulation. Now, if I were to give a basic, starting off giving a basic Wyckoff analysis, right, there is 4 types, right? 2 types of direction. You have your continuation, and then you have your reversal, right? So your reversals are going to be your accumulation. Now, let me tell you one thing before I get into this. Accumulations, so every single bottom that you see on a chart, every single bottom that you see around these areas, right, from a weekly to a 1 minute time frame, from all bottoms that you see being created are all accumulations. They're all Wyckoff. I can look at this area right here and know that this is Wyckoff, know that this was demand creation, right, know that big money entered here from the consolidation right before that large move. All bottoms are going to be accumulation, as well as all tops are going to be distribution, some sort of scheme. They're all not going to look the same, and that's why I'm not going through the labels today with you guys. But to get a basic understanding of what we're looking at here, right, when it comes to accumulation, now, distribution is going to be the exact opposite, okay? So the market behavior we're looking for in accumulation, we're going to be looking for in distribution. One's on the bottom, right? One's on the top. It's the same behavior, but different ways, right? Opposite. So what this means is when we're accumulating, right, we want to see price start to slow down, create some sort of liquidity. And what I mean by this is clean highs and clean lows. So what this is doing, and this is creating liquidity, right? It's basically squeezing price as we're coming down, manipulating lows. So all of these lows that are taking out is all liquidity. All longs, right, with stops underneath these lows. Maybe they got in here, maybe they got in here. Whatever they're looking to trade, right, they have their stops underneath these lows. Every single low is going to have some sort of liquidity. Every single high is going to have some sort of liquidity. We can use more confluences looking at charts and with analysis to understand what liquidity we want to either target or look to take some possible trades off of after a raid and some sort of structure formed. But just know that every single top and every single bottom is going to have liquidity, right? Every high and every low will have liquidity. So as we are coming down, right, price is creating clean highs, clean lower highs, lower lows, clean lower highs and lower lows while taking the lows, right? So what I mean by manipulation of lows whenever I'm talking about that is we're manipulating the lows, price is slowing down, right? So we're taking all the long liquidity from these lows, but at the same time, we're leaving highs. So what this means is in accumulation, as we're taking lows, right? As we're taking all these longs out of trades, while this happens, market makers are entering their positions, right? They're capitulating their liquidity to be able to get into a larger position, right, and move the market from that. So what this means is, while price is coming down, right, they're allowing retail to build up liquidity. Retail is the uninformed money. So we have clean highs while taking out lows. So this is making the uninformed money believe, right, that we're just going to keep continuing down. They see breaks of structures. If you're trading market structure, right, they see the continuous break of structure down. But at the same time, right, there's probably equal highs created within these areas. What this is doing is inducing that liquidity, right? So then when we finally get one break of structure, all this liquidity is now available all on this side to take out. And that's why we see the accumulation, right, have that first break of structure and then a reaccumulation, and then it's gone from that, and you never see a return to this zone usually. So in accumulation, right, it's that what we talked about where we're inducing shorts while taking out lows. So we're manipulating lows while inducing shorts. People are getting in short trades while we're manipulating lows. Price action is slow, right? Slow volume on the downside movements, and then on the upside movements, we want to see some volume increase, right? What this means is it's starting to show a transfer as far as what direction I'm looking for, right? So if these candles are super lethargic, right, on the way down, it seems like all the supply has been taken care of. I'll show you guys a example of this in a second, right? But just for the theory of it, if price action is super lethargic on the way down, and then one or two candles is taking out this liquidity here. Yeah, it gave this supply and is continuing down, right? But we see large impulses on the up moves. Let's get rid of these. That's showing you that it's starting to show some type of volume, right? Something is there, something is starting to form, right? At this time, we don't have a break of structure or anything like that. So we're not looking to get in the trade until we get that market structure confirmation with our other confirmations following, right? So manipulation, we're taking out lows, manipulating lows while inducing highs, leaving clean highs over here, all this liquidity, right? And then the distribution is going to be the exact opposite. So we're manipulating highs, right? Low volume on these up moves, high volume on the down moves. Low volume on the up moves, high volume on the down moves. It's starting to show some type of transfer, right? And then you end up getting all of your shorts taken out with this distribution. Takes out all the highs, right? People are getting in trades up here. Maybe they thought this was a breakout. Maybe they have limits up here, buy limits up here, saying, hey, if it goes out of this range, I know it's going to continue to the upside. What happens? We take that liquidity. Market makers are now able to enter the market, reverse the trend, right? And then we get that final break of structure downside, LPSY, for that continuation, right? For tops and bottoms. Now, that was the reversals. That's just the behavior. So right here, right, we're manipulating highs while leaving lows. We're taking out highs, taking out highs while leaving lows, and then finally building up enough liquidity so that one break of structure right here can now take us all the way down because of all of this previous liquidity that we have left, right? Whatever range we are looking in. So that's your reversals, right? Your accumulation, manipulation of lows, inducement of shorts, and then your distribution, which is your inducement of longs, right? While manipulating highs. Now we'll talk about the continuations. So there's two I look for, right? We have our rally-based rally. And then I have a drop-based drop. A lot of times what this is, we might see some structure over here, right? Price pushes very high, leaves a lot of imbalances, and then we see some sort of consolidation. Now within this area is going to be reaccumulation, another Wyckoff schematic, right? What is reaccumulation? Reaccumulation is going to be distribution to accumulation. So within this area, we're going to see a distribution form out, right? This is what this is doing, right? After this large move, this is getting people in shorts. This is getting retail in shorts. They're saying, hey, maybe we're at a supply zone back here, or we just had this fat move, right? You're looking at a chart, you see prices up however much, right? And you want to take it to the downside because now you have all this imbalance and you're like, oh, okay, maybe it'll come back down here. What happens? Price ends up taking out liquidity from the lows over here after taking out the highs, right? So it takes out the shorts first. And and then it takes out the longs, right? So after it takes out the shorts, it manipulates the highs, then it starts to come down. We start to see this accumulation, right? And what this is doing is it's introducing new demand, right? With the market makers, right, entering this continuation. So they're in down here, right? They make their money on this. They start to take profits. And the way that they're taking profits is inducing retail to get into either shorts or longs right before that final move. And then they purge all the liquidity within the range. And then they are able to now enter again and continue the market this way. So this is going to be your rally-based rally. I'll go ahead and label that. And what this does, right, this reaccumulation is it creates demand. So if I see price push up, right, break some highs over here and then start to slowly again clean highs, clean lows, come into now this demand zone over here that was just created from this versus a demand zone down here, right? And then I get the following confirmations where I get breaks of structure upside. I can now look for demand zones within this area after a mitigation, right, to now take my trade to the upside. So that's an example of a rally-based rally. The opposite of that is going to be a drop-based drop. So just like accumulation and distribution, it's just the same thing flipped. So a drop-based drop will look like this. Right, and this area is going to be redistribution. So remember over here how we talked about reaccumulation, right? That distribution to then accumulation. This is going to be accumulation to distribution. Now what does this do? Right, same exact thing as we were talking about before. Banks, whales enter, move price down. They start to take profits, right? Longs or retail uninformed money, they try to knife catch here, right? They're trying to catch a bottom. We've all been in this situation before. Just looking at a chart, right? You might try to catch this bottom right here, think it's reversing. Maybe it's on a demand zone, previous demand zone or something similar, right? And you're looking to take this trade to the upside because you start to see some sort of accumulation. Now, the issue with redistributions is, right, you'll get your accumulation and then you'll get your final liquidity rate to the upside, banks enter again, and then the continuation to the downside. A lot of the times when I first started studying these concepts, right, I got super confused with reaccumulations and redistributions because it was the two in one. So going and back testing, right, and looking at other analysis and other charts, right, previous data, I started to understand, okay, I can see now where that introduction of demand was, right, as well as experience from just watching charts, right, getting in plays and getting your hands dirty, right? So this is your drop-based drop. Now, just like we talked about before, this would be the creation of supply. Why is this the creation of supply? Because now that all the liquidity has been purged within this range, and now that the market makers are able to enter and push price down, we know that they were in over here. So if they start to take profits, right, and we start to see price come back up, again, start to leave lows. So it's leaving all this liquidity right here, take highs, tap our zone. If we get a break of structure, we can look for a supply zone over here and take our trade to the downside now, because this is a high that caused a new low, lower high was formed, and then the downside continuation. So you can start to see where we use market structure, right, with our Wyckoff analysis when looking to take trades. I will tell you something too. Please do not go to these charts, right, and try to trade Wyckoff right away. You need your other confluences as far as zones of mitigation goes, right, or certain PUIs. Because a lot of the times you might say, hey, this is an accumulation, it has to go higher. But now you just find yourself knife catching 24/7, right? And losing trades. So you have your reversals, which are your accumulation and distribution. And then you have your rally-based rally, or your continuations, which are your rally-based rally, right? And your drop-based drop. So this might be a very obvious break of structure. Some traders are looking to maybe get in shorts up here, but then price continues to the downside and they're left out, right? So let's get rid of these real quick and then do a detailed range breakdown of ADA from literally the weekly to where we are now. So using that knowledge, right, those concepts, and just to show you some examples real quick, if we go on a daily chart, every bottom, right, manipulation of lows, and then we get that break of structure upside that's introducing demand, and then we get the final move. Again, accumulation, right, manipulation of lows, and then we get that break of structure upside. Just looking at a daily chart, right, Now for the distribution, same exact thing up here, right? It's leaving those longs, like we said. All of these equal lows, right? You can see. So this is how I'm using trend lines. I'm using them as liquidity. I notice that, hey, this is a trend line. Retail is going to buy this every time, right? It bounces on this trend line. And what are they doing? They're putting their stop losses, right, underneath these lows. So they're getting in longs. Maybe here, right? Everywhere in this area, putting their stop losses underneath these lows because they're because it's underneath the trend line, right? This is how it's protected to them when they're looking at it. Maybe it's bouncing off support, whatever they're looking at, right? They're going to be putting their stop losses underneath these lows. So I'm saying, okay, it's inducing longs, right? While at the same time taking out highs. So we see all of this short liquidity here. And then again, once that short liquidity is purged, right? Once all the early shorts are now taken out, market makers are now able to enter. We get a break of structure downside, and then we get that final continuation, right? This would be that drop-based drop that I was talking about. If I go to lower time frames, and I'll show you exactly what I mean. All right, again, like we were talking about, right? So we see the inducement of longs now. We can see this now in a lower time frame, the same exact thing starting to occur. So longs are getting in trades here, right? Putting their stop losses underneath these lows. Retail's comfortable here. Retail's comfortable here. And then we get a break of structure. They might see this, right, as a higher low being formed and try to take this to the upside, however they're looking at it, right? But we can see that price started to break structure to the downside, created areas of supply after liquidating all the shorts out of their trades. And then we finally get that continuation. And now this one move took out all of this liquidity like I was talking about, right? Now that we have built up all this liquidity and prices basically squeezing, right? We purged the early shorts, and now that all the early shorts are taken out, price now moves down. And something too, right? All of these lower time frame accumulations can be certain labels for higher time frame accumulations or distributions, right? You'll start to notice it everywhere, which is why I will tell you not to trade off of it, right? We need those other confluences as well. We can't just trade off of Wyckoff, right? Or at least I don't for my style. So starting this from the weekly, let me get rid of this. Do a little top-down analysis for you guys. So looking at a weekly chart, remember that rally-based rally we talked about, right? I see areas of demand down here. I also see a rally-based rally right here. And what did this rally-based rally do, right? It created a large imbalance in this weekly candle right here. So if I were to just look at this side of the chart, right, I'm seeing this large imbalance that was created. If I go to this area on lower time frames, you will see again that distribution to accumulation that I was talking about. So this is a weekly chart, right? We'll go to the daily. And again, you get that distribution to then accumulation, right? Price accumulates and then continues to the upside. If I go on a lower time frame, you can see it a little bit more clear. Right, exactly what we talked about. Price comes up, right? It's creating these clean highs while manipulating lows. It's taking all these longs out of trades, and then we finally get that break of structure, right, from this high that caused a new low, and then demand is formed in here, and then the move comes. So now that all the early longs and shorts are gone, right, out of this range, and all the liquidity has been purged, now market makers can enter, move price. So that's why you will usually see me waiting after a zone is tapped, right? For manipulation, for that liquidity raid, as well as the introduction of demand or supply to be able to take my trade. So going back on the weekly, right, we notice this area as a rally-based rally, so we can mark out this whole area and then do some refinement within. Now you will notice price doesn't, I believe, yeah, it does not mitigate it. So this is where I'm like, okay, maybe we're starting to see something else, right? I go over here and then I notice what? That same exact thing, right? Drop or a rally-based rally that was formed right here. This candle, this consolidation candle, is going to be a rally-based rally on lower time frames. Here, let's do replay mode real quick just so I can show you. If I go to a 4 hour, again, that area that we were looking at, right? Distribution to then accumulation, manipulates the lows, takes out all the early longs after taking out all the early shorts. Leaves shorts right here, right? We're leaving highs. Take out the longs, introduce demand, and then we can continue from that. So I see this area as an area of demand as well. So if I want to do the entire consolidation, I can. For this range, let's mark this as a cum. And then let's bring this all the way out a second. Bring it to here, turn off replay. And we'll drag this out. Okay, so now I notice, right, on the daily time frame, I see the weekly time frame, I'm like, it hasn't been mitigated yet. There's still a possibility that we can come back into this area, right, mitigate this and finally continue from that. But at this state in time, right, I notice this rally-based rally. I see price tap into that and then have a reaction off of that. Now, the main part, right, of this analysis was done probably right here on June 15th. And I was most interested in this trade after the 20th of June. So all of this price action is nothing to me, right? We come into this area as far as this long goes, right? There's multiple opportunities within, but I'm just showing you this one play that we got into, right? So at this point in time, right, I'm looking at my range from my high to my low, where I can be looking to possibly take a trade if structure is forming, yada yada. So how we do our range, right? How we draw our range is going to be the extreme high to swing low that caused an impulsive move, right, out of the range. So we know that higher time frame structure is bearish from what I was showing you, right? This large impulsive move to the downside. And then I also noticed, right, this extreme high to this extreme low. This is going to be my range. Why is this my range? Because over here, we again had a redistribution. So an accumulation to distribution. This took out highs right here. And then supply was introduced and it created this large range, right? We see a lot of displacement and a lot of thick candles to the downside, right? So what I will tell you about this range, right, and how you can sort of get an idea as to what possible manipulation scheme that we're in, right, will be one, I'll look to say, hey, is price hugging discount or hugging premium? So when price hugs premium, what this means is price will be in the higher part of the range, right? If it is constantly in the higher part of the range, creating long liquidity and taking out highs, as well as mitigating old supply that caused a move to the downside, then that will give me more confluence, right, after a break of structure, supply mitigation, to now take this trade to the downside. Because one, we're creating all these longs all the way up the range. We're hugging premium, right? Mitigating areas of supply, taking out highs, filling imbalances, and then we get that final break of structure downside. So I'm saying everything is taken care of on the short side. Once we get that break of structure downside, now I'm in shorts, right? As far as liquidity goes. Same with longs. So now that I see everything is taken care of on the long side, I'll look to take my trade, right? So with this being said, go ahead and delete these. Right? We notice that price this entire time has been hugging, right, discount. We're getting breaks of structures out of the range, possibly. We're starting to show some impulse, right? What I was talking about, how we can see that volume impulse on these moves to the upside. So if we're looking at this volume down here, right, we can see how volume increases on the breaks of structures, right? So for this range, I'm looking at this extreme low to this extreme high. Why? Because it broke this these highs over here, right? We see reaccumulation form. So after the longs are taken out of their trades, right, we see that accumulation and then a break out of the range. So I'm looking at this as a possible bullish structure to form overall, as far as this range goes, right? I notice we're hugging discount. I see areas of supply up here as well as liquidity, right? We have liquidity, we have imbalance. We have this liquidity rate up here, so we have all this supply, right? This consolidation area. And I notice the entire time, right, we're leaving highs. So I can see here equal highs were left here, right? Clean highs were left here. We can see how all the supply is pretty much taken care of, right? These lethargic candles, and then 1 or 2 or 3 candles break structure to the upside. You can see that volume impulse, right? What we were talking about. So after price comes in and mitigates that higher time frame drop base drop, right? This zone of accumulation or reaccumulation, sorry, that we were talking about. We start to see price move up, right? It's taking out longs, and then we see that impulsive move, and I'm like, okay, I'm starting to get interested in this. Now, why am I not taking this trade at this time? Because one, I'm starting to see all of those longs again created. We're taking out highs, and then we get moves to the downside, right? But because we have this accumulation zone, there are lower orders within this zone, right? As well as this wick that caused this move and this entire move. So remember, this is the start for this move, right? This high. We tap into a zone of demand over here. So what I will show you is within lower time frames, right? Again, we're looking for the same thing we were looking for before. That consolidation before the large move to the upside. So if I go to replay mode here, show you a lower time frame, you will see that accumulation, right? We have long liquidity right here, as well as an institutional candle, a zone of accumulation before that large push to the upside. So I can mark this as a zone of demand, or I can mark this one institutional candle to look to possibly take a trade of, or after price comes back into it, I can wait for structure to now confirm that. So let's go to replay mode. Then let's show you where price ended up mitigating within this wick. So we saw that first accumulation, right? That sponsored this entire move out of the range. This is literally the start and finish. So I'm only looking at this as one impulsive move, and I'm looking for a higher low and trying to take it higher, right? How can we confirm the higher low within this situation, right? We're going to need structure after mitigation of areas and following liquidity rates. So if we go over here, this is when I was interested. Actually here. Right, so going into replay mode, right, we can look at some structure now. If we go into daily structure, we see it's hugging discount, right, manipulating lows, filling all these areas of imbalance, as well as mitigating demand and showing some impulsive moves to the upside. I start to see this volume increase, right, on these moves. If I go to the lower time frames, you're seeing what I'm saying, right? That volume increase on the breaks of structure, right? These highs over here that were causing lows on lower time frames, right? At this point in time, we don't have that full break of structure yet. But as long as I am look over this low, within this scenario, right, this low that caused this high, then I'm looking to take this trade if I can get following structure confirmations. Now, this was a very aggressive entry, right, but I can show you how everything still came together and I was still able to take this trade, right? So on the 4 hour at this point in time, right, I'm starting to see, once we come into this zone of demand again, these areas over here, right, starting to see some structure form, but this isn't very clean to me. Why is this not clean to me? Because again, we need to see highs and lows being formed, lows manipulated, right? To build up that liquidity to take us higher within the range. So at this point in time, I'm seeing a lot of lows being left, as well as highs being taken from this high, right? That caused a new low right here. So this could possibly put in a lower high and continue to the downside. But again, we want to see slow price action, right? Coming into our zone, leaving highs, and then manipulating lows. So at this point in time, we're looking at price action. I'm noticing this liquidity, and this is where I start to get very, very, very interested. Why? Because I have this unmitigated zone of demand, right? And two, I'm creating long liquidity right before it. So I could see, right, that purge of liquidity and a mitigation of demand, which to me is enough, right, for a price to break structure. If I see that break of structure, then I can look to take that trade, right? So we come into this area. I see in these longs, and I'm seeing this structure, but at this point in time, I have a high, low, just from this. High that caused a new low, This could possibly put in a lower high, right, and come to the downside. I see all these longs being created, so at this point in time, I'm not taking any trades. Let's go to a lower time frame to tap in. Right, again, highs are being taken out, lows are being created, so structure isn't super clean to me at this time. Again, now we see those lows being taken out, right? But what is happening within this time? So now that we're taking out lows and possibly coming into this area to mitigate this demand, right, I see that we're starting to leave highs. Also, remember, on higher time frames, we're in discount, and we had that large impulsive move out of the range. As long as we're over that low and we can show some sort of bullish structure, right, liquidation rates and creation of that demand, then I can look to take that trade. So I see price, right, creating lows and leaving highs at this point. So now we're manipulating lows, leaving highs, and possibly coming into a zone of demand. So I'm reading the story, right, of price action. What is it doing? I'm not worried about entries at all until I'm shown an entry, right? Until everything is there for me to actually take that entry. I'm not worried about entries. I'm just worried about reading price action, understanding the story, to look to possibly take some trades. So now we come back into these zones, right? And as we're coming in, we're still leaving lows. So this low is created here. I'm like, well, I'm not in any trades. You might say, well, there's zones of demand out here, right, that brought this high out of the range. To possibly take that, we take this liquidity, tap into this zone, possibly move upside, right? I'm not too super invested at this time because this low comes down, creates another equal low, right? So I'm saying, oh, maybe the uninformed money retail, right, they're getting into this trade because they think it's going to continue to the upside. Not super clean to me yet. I still want to see that demand mitigation and or some type of bullish structure from a break, a high that caused a new low, and a move that left imbalances. Now, if you see this move, right, this move didn't leave any imbalances. This is the 1 hour chart. So this move is completely, it's done, right? It's filled. Everything within this area, all the demand that was created within this area has been filled. So there's no reason, right, for price to possibly come back into these areas and move to the upside because everything has been taken care of over here. So after we get this large move to the upside, right, we still respect this high over here that caused a new low. So we could possibly be coming to the downside within this area. I still believe price is bearish at this point. So again, creating highs and lows, we come into our zone, and this is where I start to get interested, right? I'm looking again for highs and lows to be created. We start to get those, right, impulsive moves as well as volume, right, being created within the range. Price comes back down, mitigates again that demand that caused this break of structure. So what I mean by this is this zone right here. Remember, we were talking about the drop, base drop. This is a base, a zone of consolidation. If I go on lower time frames, this is going to be a redistribution. Accumulation to distribution. If I go on even lower time frames, you can see the story. Right? Accumulation to then distribution. Price pushes in and then breaks structure on the upside, right? Breaks this large structure on the upside. So if I'm looking for minute trades, I see price break structure on the upside after all of this consolidation. I could possibly be in within this area, right? At price 42 with a small risk at this time, but because I have a minute breaker structure upside, a zone of unmitigated supply up here, right? This displacement candle, this redistribution was unmitigated. At this point in time, I would only be feasible enough to myself, right, to take this trade to these highs. Why would I only take this trade to these highs? Because I don't have a 15-minute breaker structure, hourly breaker structure, anything else to the upside, right? That's confirming that I can take it higher into the range. So I need to be conservative, right, with my take profits and not be greedy and try to take it to areas that are unfeasible, areas that have not been shown yet. So again, I see that large impulsive move out of the range. I'm looking on the 15-minute. That candle before that candle that broke structure, right, for our demand zone. That large impulsive move to the upside that took out that high that we were talking about. This zone of demand is formed. So within this area, I get a 15-minute breaker structure upside, right? And what happens when we come up into this area? Look at the entire story, okay? Once we come up into this area of this high that caused a new low, we break this drop base drop, this redistribution that brought lower prices, right, and mitigated our zone of demand, and then immediately broke structure upside with volume and a large impulsive candle. Let's make this demand. We create demand. And at this point in time, right, I'm looking to possibly take this trade to the upside. Now, at this point in time, right, this area is a accumulation as well. So we could come and retrace the extreme, right, and then continue from there. So I'm just looking for structure right now. 15-minute bullish structure. How can I confirm that higher low, right? I'm going to need a 5-minute breaker structure upside. This high that caused a new low, right, is broken. We see a lower time frame reaccumulation start to play out. So we have a demand zone over here, right, to look to possibly take trades off of. Why am I not too interested in this trade at the time? Because again, we have more lows being created, right? This is when it's starting to get interesting to me. But I need the final confirmation, some sort of more impulse moves, right, to the upside to tell me now that price is changing. So following volume, right, those impulsive moves to the upside, what are we doing on the downside? Look at the decreasing volume, right, as we're going down and creating clean highs, as well as leaving all of these shorts up here. So maybe retail sees this, right, as a resistance zone. They take trades off of this, and they have their stop losses over this resistance zone that they believe, right? Price takes that minute demand zone. Not too interested at this trade at this time. Why? Because these lower time frames are still bearish. I need that 5-minute structure to show me some sort of impulse, right, with volume. So when we come into this area, you don't see a lot of volume on this move to the upside at all. And how can I confirm that higher low once it comes into this area? With minute breaker structures to the upside, right? So price is coming down. We have a zone of accumulation within this area, right? As well as this rally-based rally. So you can look at this entire area as demand, but we already mitigated it here. So I'm going to be looking at areas lower. This impulsive candle that brought structure breaks out of the range right here. We can look to possibly come tap into this, right? I can look to possibly take trades to the upside. Price again creates clean highs and lows. I believe this is the continuation. Oh yeah, hold on. Let me go back for you. Let's get rid of this. Okay, so one price tapped into my zone, right, of demand. And I look to possibly take this trade to the upside. I'm looking at institutional candles within this area, that last sell before buy candle, right, that mitigated this zone to look to possibly take trades to the upside. And this is where I'm most interested in my trade, right? Let me go back to repo mode for you guys real quick, my bad. Even more than that, let's go right here. Okay, so once we first tap into our zone, and this is something that I've told you guys about before, when understanding like what actually happens, right? We see price tap into this demand zone, this institutional candle that we were talking about, right? Let's make this IC. And then we start to see, right, that structures start to form. So this could get a lot of people FOMOing, right? Or limit orders that have limits on top of this institutional candle. Once price taps into that, it immediately moves away. They're happy, right? They think, oh, okay, everything is cool, but we still have unmitigated zones down here, right? These imbalances, as well as we created equal lows right here and here, right, to possibly mitigate. So we wait for a price. Oh my goodness, let me go back. So at this point in time, right, I'm waiting for my 5-minute structure to turn bullish because I have a larger, right, swing structure that happens. So if I wanted to show premium and discount for you guys for this, you see we're in discount now, creating highs, leaving highs, right, while manipulating lows. So let me go, let's move this back one more. Right, so once price starts to tap into our zone, I have a couple options. One, I took an aggressive trade, right, because it was on the lower time frames. I was watching as structure was coming into these areas. I believe it was on the 1 minute at this point in time. Waiting for an impulsive move, right, a break of structure upside after tapping into our areas from a new high that caused a new low to possibly take this trade. So let's play this out. After we liquidate, right, these traders right here, all of these early longs that got in off of this one move to the upside, they saw break and retest, right, from these highs that caused new lows over here. So they're possibly looking at structure like this, entering right here, right, trying to take a higher low. But remember, this high over here caused a new low. So what happens, that liquidity is rated. It taps into this zone of redistribution right here, and then we get that final move to the downside from that. So now looking at this structure, right, as we come into this area, it's a little difficult to show because I don't know if I can get the second time frames on these, right? But we have a high here, right, that caused a new low. And I'm looking for a break of structure of that with some impulsive moves, right? I end up getting that break of structure, and then let me go back. My fault. And again, this is a lower time frame distribution. This is a distribution right here. If I go into the seconds charts, I don't know if it'll let us. I actually don't even want to try because it might take us all the way out. We'll look at that later, right? But this high that caused a new low, as well as this high that caused a new low, this is a drop-based drop right here, okay? So on the lower time frames, this is a zone of redistribution, right? This is when the analytics on the lower time frames start to come into play. But to keep this as simple as possible, just look at your higher time frames. It's always going to be higher time frame bias over lower time frame bias, because you might be looking at lower time frames, seeing breaks of structures everywhere, right, up and down. But if we can look on the higher time frames, we can start to get some clarity, as well as we don't get that paralysis analysis, right? All of a sudden we're marking every single buy before sell candle or sell before buy candle we see and trying to take trades off of them and losing, right? So this actual high right here was taken out, right? This zone of redistribution. I do it from this on lower time frames, you'll see it's this high right here, right? That caused a new low, but we can wait for price to break structure upside. It ends up breaking structure upside. I'm looking for that zone now of accumulation, right, to look to possibly take my trade off of. Accumulation, right, that demand zone. You can look to enter on the 50 or on the top. At this point in time, because I'm on the 1 minute, I would risk the top. I see this reaccumulation as well, so you can do it off of this institutional sell before buy candle or off the top of the range. Now, I'll just do it off the top for you guys. Show what I mean, right? At this point in time, right, if I'm looking for targets, where can I target within this scenario? So we have clean highs that were left over here, but then we have a high right here, right, that caused a new low. But remember, overall, this structure to me is bullish, right? If we can create a higher low, then I could possibly look to take this to the upside. So one, I will target an area of supply within this area, right, to be conservative as far as my first take profit. If I get a break of structure following that, then I can start the hold for longer take profits. Why? Because I'm on the 1 minute at this point in time, right? Price taps into our zone, starts to take off. Let's let this play out, and I actually think it comes back one more time. And then we'll let this play out, right? We get that first take profit, so now I'm like, okay, it's tapped into our zone. I have my stops to break even. I can possibly look to take this higher into the range. Now I see all of these clean highs over here, right? So all of this to me is liquidity, as well as this liquidity at the top of this move right here, right? So I could possibly look to take a unmitigated supply zone up here, or take it to the liquidity up here. Why would I not take it to the liquidity up here? Because I don't have that confirmation at the time, right, that this high is broken. And I will look to take it up there. So I'm going to take it to areas over here. We let structure start to form. Then we get that move from that, right? It comes into our areas of supply. So if I go on the lower, let's go to the 5 minute real quick to show you guys what I mean, because the lower time frames will be confusing as far as take profits go. My trading view will load. Okay. Cool. All right, so at this point in time, right, I see this, again, drop base drop, that buy before sell candle. That brought this move down to the range. It caused this new low internally, okay? But externally, right, I'm creating some sort of bullish structure. So I'm in this trade at this time, right, targeting this and then possibly higher. Price plays out. We start to see those lows created as well as highs, right, being manipulated within this range, as well as low volume. So as we're making this up move, leaving lows and manipulating highs, right, we are showing no volume, showing no strength, right, on this move to the upside. Price comes into our zone, right, hits our TP, takes out those higher, and then continues from that. So now that it came into my zone, right, reaccumulated, I can look to, after this first take profit is hit, at this point in time, so if I go back here, then I can target areas higher within the range. I see this liquidity as well as on higher time frames. These highs, right, that caused the new low. So if this liquidity is purged, that could be a possible break to structure, break of structure to me, right? And I could hold higher within the range. So you could, one, take it to this liquidity, or two, take it to unmitigated areas of supply and demand, right? Following imbalances. We see this large imbalance. This is very obvious to us. What this did is it moved so quickly, right, that not enough orders were able to get filled within this move. So what do we expect the market to do, right? To fill those orders. But we can use all of these other confirmations to get into that. Price ends up distributing. Let's play this out. Right, taps into our take profit. So that unmitigated area, right, fills all those imbalances and taps into our take profit. This drop base drop, right, drop base drop, area of consolidation. Longs were taken out. Early longs were taken out, and then the early shorts were taken out, and then we got the final move. So this entire area of consolidation, right, is your supply zone, as well as that displacement, right, that we got. So we have structure breaks to the upside following an unmitigated supply zone, as well as imbalance, right? That's where I'm like, okay, this is a possibly good take profit. And because this high over here, right, this redistribution over here caused a new low. So at this point in time, I need these highs to get broken before I can look to target higher within the range. Now it does end up violating that supply zone, right? I start to see candle closures within that supply zone. And I'm very interested at this time. Remember, we still have unmitigated zones of demand down here, but we also violated the supply, right? We're starting to show some sort of strength. So at this point in time, after that happens, I can look to target areas higher within the range. I have liquidity right here that I could take it to, right? For my take profit as far as that goes, and then I have areas higher within that. So looking at the story of price, right, after we start to show that volume increase to the upside on this move, and we tap into this supply zone, we actually violate the supply zone, come back down, right, mitigate areas of demand over here, and then continue to the upside, and I take it to this liquidity within the range. And why do I take it to liquidity is going to be the same exact way why I enter a trade, right? So what that means is when I'm looking to enter a trade, I'm looking for a liquidity purge, right? That manipulation of lows, as well as that volume impulse to the upside. So within this area, I noticed, right, all of this price action. So if I was the uninformed trader, right, the retail trader who didn't know what he was doing within this scenario, trying to take my trade, right, I see this as resistance. And maybe I'm in shorts over here with my stops over this. What ends up happening, I target to this liquidity, right? And we take out those shorts. We take out all of these previous shorts. And now that all the previous shorts are taken out, we can look to possibly move back into the range, right? Mitigate unmitigated areas of demand over here, take out longs over here, right? Remember our premium discount from now this move. right? So we're in premium, right? We just took out all the shorts. We're starting to show some high volume, right? With bearish candles, bearish engulfing candles, and breaks of structures to the downside. This low, this rally-based rally, right? On lower time frames, you'll see this as a low and a high. Gets broken right here. We get that displacement. And then after all the previous shorts were taken out of their trades, right? After all the previous liquidity was purged, now market makers can enter and possibly push price down. Price starts to push down, but at this point in time, I'm targeting higher within the range, right? Now that my liquidity has been purged, as well as I've received breaks of structures from this high that caused a new low. If I go on lower time frames, you can see what I mean. This zone of redistribution, right? Accumulation to then distribution created supply. So this entire zone is actually supply, right? And then once we came into that, we broke it. We invalidated it with strength, right? As well as so this right here, right, is a break of structure from this high that caused a new low, and then I'm looking to take this higher. Now I have liquidity here within my higher time frame range that we were talking about. Liquidity here, right? And then if I get these breaks of structures from these highs that cause new lows over here, right, I can look to possibly take this higher into the range. So at this point in time, I'm targeting liquidity right here from these shorts, as well as going with my bullish trend, right? So now that we're creating higher lows and higher highs, I'm looking for liquidity points as well as unmitigated zones of supply as far as take profits go. Now we let price play out. Now what do we see here, right? That same thing we were talking about before, where we were creating equal lows, right, as we were coming up, manipulating highs and taking out all this previous liquidity, right? What happens? Now that all the previous liquidity has been purged and we left all of these lows, we can now possibly pull back, right? Now that the liquidity is available within the market for the market makers to take this trade to the downside, right? So we got our take profit 1 and our take profit 2. Price then takes out these lows right here. And then what do we see? After it takes out that liquidity, right? Notice, as we were talking about, right? Premium discount. We come into discount. We mitigate areas of reaccumulation, right? These areas right here, as well as take out these longs, right? And then we receive a break of structure upside. So we look for demand candles over here to possibly take this to the upside, right? Let's draw this as demand. And after that liquidation rate, as well as an introduction of demand from this break of structure, from this high that caused a low, remember, look, as we were coming down, right, with the volume that we were talking about, we're creating clean highs, clean lows. All this liquidity is available. And then we purge our liquidity over here, tap into areas of demand over here, then get a break of structure to the upside, as well as leave all of these highs right here, right? We can see these equal highs right here. And then from that, I'm expecting price to now respect this, right? And not break any lows. If it does break a low, then I know that this could possibly come lower into premium, right? Or sorry, discount. So price breaks the demand zone. What happens after it breaks that demand zone, right? Again, we get a liquidity raid. So this is where I was actually interested in within the trade at this point in time, because on a higher time frame, this move that rejected this supply. So even though we weren't in over here, right? This is actually where I got in. Even though I was not in over here from that play that I showed you, right? Because it was unconfirmed, we took it to those feasible targets within the moment. We ended up getting our take profit hit, and then price starts to come back down. Now, again, that reaccumulation that we were talking about is going to be a distribution to then accumulation. So I'm looking for that distribution, and then on the downside movement, I'm looking for the manipulation of lows, right? Slow price action as we're coming into these areas. We end up taking out these longs as well. Right, so we take out all of this liquidity, all these equal longs, and now that all that is left here is just imbalance, right, as well as demand. we tap into that demand. And then on lower time frames, this is where I was most interested in the trade. Let's go to here. Let's go to 5. Right, so we came into this area and we received a break of structure upside. We have zones of accumulation right here that we can possibly look to take trades off of, as well as institutional candles down here. Now remember, again, premium discount. So as I'm going to lower time frames, I'm doing the same exact thing I'm looking for on higher time frames. I receive a break of structure upside, right? I'm looking at now this range, the liquidity within, as well as unmitigated areas of supply and demand. All right, this entire zone of consolidation is your demand zone. Price taps into that. We see, again, right, another liquidity purge. So this demand that was created that started to show me, right, this move out of the range. I'm like, okay, is this a break of structure? I can't confirm that, right, until we get a following higher low from that. So at this point in time, this isn't a break in structure, but it's showing me, right, some sort of impulse to the upside. I need the higher low to confirm that. Again, we have lows, equal lows that were created right here. As well as, if I go on the higher time frames and show you recent price action over here. Right, this area that invalidated the supply right here, if I go on the lower time frames, my fault, I think it was a 15-minute. Yeah, we have an institutional candle, right, that was right here, imbalances as well. On the 15, show you a possible cleaner one, right, this sell before buy candle that brought us out of this range, as well as this accumulation right here. As long as I'm holding this, right, we're showing low volume on the downside movements, as well as look at all these highs, right, that we're leaving within this move. As long as that's happening, right, as long as I'm holding these lows and creating new demand and showing that impulse to the upside on those volume transfers, right, I can look to possibly take this trade to the upside with structure and demand. So right, price taps into this zone now, and then shows this impulsive move. Again, this drop, base drop right here, this zone of accumulation to distribution is taken out, right? And now I have this entire institutional candle as a possible candle to look for buys. Because now I have the minute break of structure after all of our following confirmations. So let's draw this as the institutional candle. And then I will show you this. And then we will go ahead and wrap it up here. But when we're looking at this, right, and we're looking to take trades off of this, one, we can wait for a minute structure to turn bullish after mitigating our zone of institutional candle, right, where we're looking to take the trade. So again, if I'm using premium discount, now this impulsive move, I'm looking to take buys, right, in discount, as well as I have an institutional candle, breaker structures upside, and all that following confirmation, right? So one, I could take it off the top of this zone. My stop's underneath lows over here. But at this point in time, I'm going to wait for my minute structure to turn bullish, right? Price comes in, starts to create again those clean highs that we were talking about. We can see all of these highs being left, as well as we start to manipulate. So if I put this out right here, price taps in, right? And then what do we receive after? Another impulsive move to the upside, right? Again, that same exact thing that we are looking at right here. And I see volume increases on this move, right? Starting to show some sort of demand within this trend. We have our institutional candle, comes lower into that, mitigates these institutional candles, and then this is where I'm most interested in the trade. We get a break of structure upside with this volume. We get a lot of volatility, right? And then a large break of structure upside on the minute time frame. So I was actually looking at the 15-second in this scenario, but if we're looking at this, right, we can see still that volume that was being formed. This high that caused a new low was immediately broken, right? all of this price action was squeezed, as well as prices coming very, very slowly, right, into this zone of demand in my case. So one, I could have it with stops underneath this, right? Or two, I could wait for that minute break of structure upside, look for an institutional candle over here, or a zone of demand. Now, I'm going to use this entire zone as a zone of demand. So if I draw it out like this, the reason I'm doing this is because it was the area of consolidation right before that one move. And at this point in time, I'm on a minute chart too. And three, I am able to personally risk this, right? Because one, I could take it off the top of this institutional candle here. Stops underneath this low or this demand zone. I chose to do it underneath the demand zone. And then we wait for a price to now tap into that. Now where am I going to take profits within this time, right? So now that we have gotten all of those confirmations, we got breaks of structures upside, as well as we manipulated this low right here. I'm taking it to the most obvious zones, right, that are unmitigated to me, right? So at this point in time, right, we took our first take profit over here at 4646, these equal highs that were right here, as well as this imbalance. So I said, okay, even if price comes back up, even if I didn't catch this bottom right here, right, and we come up and create a lower high, I'll be taken out of this trade and I'll be protected, right? If we come to the downside, mitigate areas of demand lower, or whatever happens, right? I still need to have that protection when entering my trade. It's not all this analysis and then once it's done, it's done. You also need to know where to get out, right? Most important things within the market. So we have that institutional candle. We're looking to now take our trade off of this. If it taps into that zone, price ends up tapping into that, right? And then we see that continuation after that. Now you could have your stops underneath the low, right? Or the demand zone. So if I go to show you again, it never violated this low, right? It created a higher low. So one, I could have had it underneath this low, but I chose a little more safety, right? Put it underneath this demand zone. Again, targeting that liquidity. So this is our first take profit, right? That take profit is hit. And then we're looking for next take profits within the range. So I see all this liquidity right here, right? Again, that same exact thing that I was showing you before. So this is retail very comfortable in shorts, right? Look at all this clean price action. It looks like supply is being taken care of this entire time, right? So once all of this is taken care of, right? All this liquidity is taken care of on this down move. Once I get that 1 minute break of structure, I now have the ability to take out all this liquidity. Because all the liquidity has been taken care of, right? We've taken out all the longs and we've introduced demand. Now I have the ability to take out all of this previous price action from this liquidity, right? Again, remember structure, this high that caused a low. I'm looking for areas over here, right, to take profits in at this point in time. So I have highs here. And then I could be even looking to take profits here, right? Or higher time frames because, remember, we got a higher low that was formed, as well as this high that was formed. So one, I could target now this week high within the range, right? And then look to target areas of supply over here. But again, we received that break of structure, right, with some volume and imbalance. This is what I want to see, right? I want to see price push market in one direction with imbalances left behind, with people that couldn't get in, right? Orders that could not be filled. So then we could eventually come back down to mitigate that and look to possibly take that trade. But now that we were in it there, let's let this play out. Right, I see price take out these highs right here. So we talked about that take profit that we were talking about. This is where we took our first, and then we can target areas higher within the range. Now this is a weak high as well as these unmitigated zones of supply and demand. So I could be a little conservative, right? Take a profit here and be like, well, this high caused a low. Within this range, it's also in premium. That's not bad. One thing I will tell you, right? It is going to be 100% up to you with trading as far as how you're going to approach any concept. Look at any concept, look at any chart. it is all going to be based off of you and your style, right? So if I wanted to hold and take profits up here, I could, or if I wanted to hold for that weak high because I did all of that other analysis, right, that previous analysis, then I can look to possibly do that. This could also be based on profits, right, if I had good profits over here or not. And then let me give you the other entry, right? So now that we were on the lower time frames and I showed you that break a structure upside, right? We got those impulsive moves. Let's say you did not get this entry right here at all. Let's say you did not get this entry. So let's take this out, right? We noticed this impulsive move, and I noticed the zone, right? That accumulation that we showed that created demand and brought this impulsive move, right? That violated this supply. So this high caused a new low. Accumulation was formed, demand was formed, and then we got that impulsive move. So one, I could choose the candle before the candle, or I could choose the entire range, right? As a possible demand zone to now take an even more confirmed trade, right? Now that I've gotten all of these breaks of structures to the upside, once price comes into this demand zone, right, I can look to possibly take this trade to the upside. Now that I have even more confirmation, right? So let's say I didn't get in here, I can take it in here, right? Something like this. I mean, this would be entirely up to you and your risk, right? At this point in time, this is a 0.82% stop loss, so that's not bad at all to me, right? But we can go to lower time frames, confirm that over here, right? And look to enter zones over here. What I mean by this is, right, we start to see that accumulation again as we're coming in. And then we see this large impulsive move to the downside. Immediately broke to the upside. Let's go to a 5-minute for you guys to make this a little bit easier and show you what I mean, right? This zone of consolidation before this move to the upside is a zone of demand right here. So if I'm not in here either, after this zone was mitigated, I can look for even more confirmation, right? I get a 5-minute change of character upside. So this high is taken out, right? One, you could choose this institutional candle here because it caused this move, right, internally, or you can wait for even more confirmation. You can wait for a high that caused a low to be taken out. So this high that caused a low is taken out here. We look for that area of reaccumulation, right, that area that shows demand. And then one, we can choose institutional candles, right, within this area, or we can take it off of the demand zone. So if we wanted to do some refinement now with this 5-minute zone, right, we could take premium and discount of now the demand zone. And I say, okay, there's an institutional candle here. Looks to have been mitigated. Let's go to lower time frames. Right, zones right here that we could possibly take trades off of. This is a discount of this entire range. Right, so once price comes back into this, now I've received a 5-minute break of structure to the upside following all this previous confirmation. So I have another large impulsive move to the upside, high that caused a new low. This is accumulation again to distribution. So you can see right here, if I take this away, all of these lows, right? Looks like this. These equal lows that are being formed after this demand zone was mitigated, right? So this high caused a new low. This ends up being a liquidity raid. We introduce new demand when we break structure to the upside, right? And then I'm looking for that zone of reaccumulation on lower time frames to look to possibly take a buy. Now we can use the last buy before sell candle. That took it all the way to the upside within this scenario, or you can choose to use the entire zone. So let's go ahead and put a long out. And then before I show you the take profits, okay. All right, stops underneath this low or this low. Why? This low should be respected based off of all of our previous analysis, right? We got accumulations, breaks of structures to the upside. So if this low is violated, then my bias will change. So again, now we can target areas higher within the range, but because we got this now break of structure to the upside from this trade right here, right? Or sorry, from this action, this price action right here. Again, remember this is distribution to then accumulation. So we distribute, right? But we're not showing any sort of displacement. Everything is being taken care of as we're coming down lower. And we see that distribution to then accumulation. This was actually a really clean chart, right? To show you this. Highs are manipulated, They come down into discount of this range, mitigate supply. Now that we've taken out all of our, demand. Now that we've taken out all of our previous long liquidity, we're able to now introduce new long liquidity. We get a break of structure upside, and then we take this now trade to the upside. One, I could target these weak highs right here, right? Or I could target higher into the range. This will be my first conservative, right? Take profit. And then following, if I get this break of structure to the upside with some volume, right, I can target unmitigated areas higher within this range. Again, a drop base drop is right here. This was the supply that I was looking for to be mitigated, right, to take some take profit within this scenario. So one, our first take profit is going to be here. We let price play out. And notice that now that we've done all the confirmation and waited for all this confirmation, price moves immediately away from that, right? And then boom, right? We get that final move. So now that we weren't, right, we were in over here. This was our entry when everyone got in with me. But if you wanted to wait, right, and get the even more confirmed trade, right, this was very aggressive at the time. But now that we got the confirmed trade up to the upside here, right, I can now target higher areas. So we have that supply, then we get a validation or an invalidation of that supply, right? So now I'm targeting this high. Why? Because this is a weak high. This high did not cause a new low from this move, right? So at this point in time, I'm looking at structure like this. We've put in a higher low, and I'm looking to now take it higher. That is actually where we're at right now as far as price goes. But that was all that analysis, right? That previous analysis that we showed you. Now that we waited that for all of this demand creation to be formed, all of these signs to be shown, now that we are in our trade over here, right, our take profits are met within hours. And then I can gracefully set my stops to break even, right? Because now I know if it comes and violates this low or stops me out at break even or wherever it is, right, where I'm entering, then my bias, right, will be proved wrong. This will be accumulation to then distribution, and it will move to the downside over here. So this is where we're currently at with price, but that was just our little range analysis. So if you didn't catch it right here, you could have caught it right here. But let's do a little quick look at ETH and Bitcoin before I hop off here. Let me explain you guys this little fractal real quick that I pulled. So I actually pulled this fractal from a previous redistribution, and the reason for it is because I noticed this accumulation start to form on top of a zone of demand on higher time frames. This is weekly demand, as well as we took liquidity over here, right? We took all this liquidity. So now that the old money has been taken out, right, I'm looking for new demand for introduction of a new trend within this scenario. But if we're looking at ETH, I grabbed this fractal from this higher time frame redistribution that played out. So I saw this start to form, right, as well as that liquidity raid. So I said, okay, this is starting to look similar to me. So I pulled this out. But at this point in time, this isn't super. I'm not just gonna follow this, right? Just trade off of this. I'm gonna use market structure as well as everything else to look to take trades. But if we're looking at ETH, let's hide this real quick. We have unmitigated zones of demand right here, right? This redistribution was broken from this immediate move to the upside. We created demand. We're starting to show some demand, right? As well as we have all of these shorts within this area that are comfortable, okay? Retail has been shorting, right? You might go look at crypto Twitter, whatever you're looking at. They've been shorting this entire time. They're leaving all of these equal highs, right? We can see all these equal highs. So what I'm expecting price to do, or hope price to do, right? I can't expect it, but just based off of structure and everything we're looking at right now, I believe this is bullish, right? On the down moves, we notice that decreasing volume on lower time frames, right? We notice that decreasing volume followed by some sort of volume transfer, right? On the higher time frames. Right now, I'm not getting all of that yet, as well as I have unmitigated zones of demand. So if price creates lows, right, we come back more into premium of this range, take out highs over here, mitigate some unmitigated supply at 1229, or possibly liquidate these shorts first and then mitigate areas over here and then possibly come back down, right? This could be a distribution to then accumulation, right? We accumulate on the zone and then price is taken higher. I do believe we're starting to show a lot of demand, right? I do believe structure is starting to switch bullish, and I am going to be looking for buys as far as ETH and Bitcoin go. But right now, I don't have that volume transfer just yet, right? I don't have that impulsive move to the upside, leaving a bunch of imbalances, except I do down here. We're in premium again, remember, but we're creating longs, so I'm not looking for any trades at this time. As far as ETH goes for longs, I'm just waiting for some liquidity to be purged, followed by a displacement, right? A higher time frame break of structure to possibly look to take this trade. Now, with Bitcoin, I actually had an accumulation labeled out on this one, right? We have our preliminary support right here, automatic rally, right? We get our support test in B. Spring is formed, and then we get the test, and then we get the sign of strength when it breaks this high that caused a new low over here. And then from here, we should see an LPS, which is a reaccumulation. So we should see price form that demand, right? And then continue higher into the range. If it breaks now these structure points from this range right here, then I can confirm this as an accumulation, possibly look for zones of demand down here that were unmitigated, or zones of demand down here, wait for structure, and then look to take my trade to the upside from that. So I do believe we are in accumulation for Bitcoin. I personally think there's a lot of shorts in trades right now that literally just keep shorting this level, shorting these levels over here, right? We can see all of these clean highs over here. This trend line, right? We look at this and we understand, okay, it's a trend line, but what our trend lines are just liquidity, right? All of these highs are being left, as well as these unmitigated areas, right? And these large impulsive moves leaving imbalances without the range. So on the 4-hour time frame, we see that accumulation form, right? That impulsive move to the upside right here. It's bringing us higher into the range, taking out previous highs that caused new lows, as well as we're starting to introduce demand. Now, we are in premium, as well as we have a lot of equal lows, right, that we are starting to create. So one, I can see price possibly come up to these areas, right, take out these shorts, distribute, come back down, start to show some liquidity, right, clean highs, clean lows, tap into the demand zone, squeeze, break, we create demand again, and then we continue from that. Or two, right, we start to see that right here. Or three, price comes up, take these highs, distributes, and then immediately breaks structure, right, on a 4-hour time frame or higher with displacement, showing us that market wants this way, right? Then I'll know, okay, this is a possible accumulation to then distribution, right? And this is just going to be a continuation, and then price is going to move to the downside from a higher time frame bearish structure that we are in. But as far as Bitcoin and ETH goes, personally, I'm just going to need to see some structure form for any plays. Is there any coins or anything like that anyone wanted me to look through real quick before I go? Probably about 2-3 more minutes, and then I'll end this. But yeah, go ahead and drop that in chat right now, or let me know.
Short.
What's up, brother?
UJ shorts.
UJ. Where do I got UJ at, man? Hold on. Let's pull this up. Oh, I got the on a chart right here. I'm tripping. UJ shorts. Well, I'm actually in shorts. From this distribution that played out up here. I have this supply zone as well. That I was looking to possibly take like a continuation off of, right, on UJ here at 142.269. If we can possibly tap this institutional candle that took out these highs, right, banks entered here, and then take this trade to the downside. So if we can come up to this supply, right, and then break structure to the downside, then I can possibly look to take this trade. Now on the hourly, we still have an internal bullish structure within this little range. Let's go to the 15-minute real quick. Right, we still have an internal bullish structure, so these highs over here were taken out, right, and then we start to see price come up, This could be a possible sign of weakness. So preliminary supply, BC, sign of weakness, UT, or sorry, PC or BC, and then we get the UT, sign of weakness, right? And then we get a possible UTAD within this area, take out these equal highs right here, mitigate this institutional candle that brought our last drop, and then continue to the downside. How we would do this is we would wait for price to come into that, right? Wait for a structure to break on the downside on the 5 minute within this scenario, and then take this trade to the downside. We can also look at areas up here to possibly do the same thing. But I do believe once this distribution plays out, right, we see the final LPSY, which is accumulation to distribution. A lot of the times we don't come back up to these areas, right? And leave a lot of traders behind because they look at this, any trader looks at this and they say, okay, this is very bearish, right? They see these large printed candles that came to the downside and they see this as bearish. So they automatically chose this entire area, right, to take a trade to the downside from. And then we don't see it come back to that. They're left behind and then it continues from that. But yeah, for UJ, I have alerts at 142, 250 as far as shorts go. But yeah, I actually wanted to overall, I was going to take it to this demand here. And then, because we could possibly put any higher low on lower time frames within this area. I don't have that confirmation to take it lower or anything like that at this point in time. So I'm just targeting that demand zone there at 145.70. And then I'll take a look at E-Gold. And then we'll wrap it up for the night. The USDT. All right. Daily chart here. Let's go to the weekly. Let's do a little top-down analysis. We have a rally base right here. Impulsive candle is right here. So this zone is a zone of accumulation on lower time frames. You can mark it out like this as an entire demand zone. Price came and mitigated that. Daily. Daily's put in a change of character, but then again, we still have these lows right here. These are pretty clean. Let's go to the 4 hour real quick. I would personally want to see more of a round, right? That round bottom versus those just straight up moves, because these end up becoming lower highs, right? Versus price coming down slowly and manipulating lows and introducing demand, right? And then breaking to the upside instead of just coming into a zone and then moving off of it quickly. So let's let me delete this real quick. As far as E-Gold goes, 4 hour structure is bullish. Let's take this range, this swing high to swing low. Right here. Pretty obvious trend. Mitigated zones of supply, this redistribution right here. So we could possibly come up and tap this zone of redistribution. This consolidation zone, this supply. Take out these highs right here. Put in a distribution. Tap into this, take out these longs, possibly come down to these areas, mitigate these demand zones at 45.39, or even come lower into this higher time frame demand zone that we were talking about. Show some sort of bullish structure and then go from that. But the 65.42 supply zone, I would possibly look for price to come into that, break structure on the 4 hour. Possibly take a short, right, back into discount of this impulsive move, right, that showed you your daily change of character. And if the supply zone is violated, right, we receive more impulsive moves to the upside, then I can look for more demand, for more reaccumulation within these areas to possibly take this from. But at this point in time, I don't believe EGLD is presenting any higher time frame trades. Yeah, as well as we're starting to come into premium of that range that we were talking about before right here. This entire impulsive move. So I could see it come down, right? Possibly take out these lows right here, introduce demand, and then continue to the upside from that. Yeah, 66. Yeah, perfect. Perfect, brother. No problem, no problem. But with that said, I appreciate y'all popping out again. This is recorded, so this will be posted to YouTube. Go ahead and comment. Ask me any questions or anything like that. I will catch you guys later, and you guys have a great night.
Oh, I missed it.
You did miss it, man. The whole thing came in at the end. Tough.